Hey, let me ask you something really quick. If Bitcoin, Ethereum, and XRP are down 30, 40, 50%, does that make crypto dangerous or just uncomfortable? Most people handle this discomfort in two different ways. Either they totally swear off of crypto or they adopt the I'm going to buy and hold it forever. And in reality, neither of these choices are really a disciplined plan. Hey, if you've been hesitant about crypto or unsure whether technical analysis even works on it, this video is for you. By the end of this video, you will know whether crypto is a buy, sell, or hold, why emotions keep people stuck at the worst time, and how disciplined traders should be thinking about 2026 without guessing or gambling. No predictions, no hype, just structure. Check out this big drawdown since October of this year. Most traders may feel like they're getting wrecked by, trying to hold on to Bitcoin. How have you played this? But you want to be taking a look at this because this is where many traders feel like they are wrecked. Remember, paper hands tend to sell when crypto does something like this, and it could be just at the wrong time. And one thing we'll talk about in just a little bit has changed crypto over the past year forever, and it's completely altered how prices move. So you may be asking, what's driving the crypto prices these days? Well, there's three major things. One, institutional ETF flow, post-rally profit taking, and then just the fear cycle being amplified. With the ETFs, what's happened since the ETFs came around in about 2024 is now the banks get involved with this because they're mostly backed by institutions. And so we get a lot of basically retail investors jumping into Bitcoin through ETFs, through the banks, and then also getting out. So what's happened is we've seen huge spikes and huge rallies, but then as we've seen since October, also significant drawdowns. And there's significant correlation between what's happening with these ETFs and what's going on with the individual coins. The structure really matters here. And so we have a lot of people that are aping into crypto for the first time. So there's a lot of buyers out there, but also they turn out to be very emotional buyers that are really quick to pull the trigger to get the heck out. The rally that typically goes along with halving is also an issue. The last halving was back in April 2024. The next one will be coming up in 2028. The most notable thing is the rally that's taken place since the last halving, excuse me, is like very muted compared to the rallies that took place after the previous halvings. The other thing I find really interesting is that I believe a lot of people who are participants in the coins are primarily holders. 75 to 80% of people are just a long time, hold it forever, holding over a half a year and that kind of stuff. And only 20 to 25% are short term traders. And I think that that's where the hidden gold really is in crypto, learning how to swing trade the crypto coins. Because believe it or not, if crypto were random, the institutions and our government wouldn't be involved in it the way they are. Now, I want to remind you to stay with us to the end of the video because I will go over the charts of every one of the coins that I'm looking at today. That includes Bitcoin, Ethereum, and XRP. So Bitcoin continues to be the leading indicator. One, it's the oldest coin, and it's also suffered a 50% drawdown since October. It's currently below the key averages. However, price action may be in a setup phase. Now we're just waiting for a trigger. You got to remember that Bitcoin is considered crypto gold and has a fixed supply capped at 21 million coins and is primarily used as a store of value. That's why a lot of traders and investors treat it like gold and they want to buy it and hold it forever. The downside since the recent October peak is a very clear example of the boom bust cycle that Bitcoin tends to go on. Remember, as we identify the support zone, this is where the diamond hands tend to cluster because they're getting ready to buy. I want to remind you that one of the momentum indicators that I look at that I'll reveal later provides an excellent, almost uncanny way of at least identifying where the bottoms or the reversals should be. So while my momentum indicator is setting up, this is not a time for FOMO. It's a time to get ready and be patient and be prepared. At this particular moment, it appears as if Ethereum is actually shaping up better than the other coins for a potential rally. XRP showing a lot of volatility at a significant low. And you have to remember, what are these coins known for? Well, Ethereum is a programmable blockchain application layer. It powers small contracts, decentralized apps, and I really like Ethereum to have at least a pretty stable position in it. Its value is tied to network usage, innovation, and adoption. XRP, on the other hand, is a cross border payment settlement asset, and it prides itself in fast transactions, low cost global transfer between financial institutions. Its price behavior is more sensitive to adoption, partnership, and regulations than speculations alone. That when we do our technical analysis on this, what are we looking for? We're looking for trend, we're looking for support. I'm looking for my momentum to shift. And we'll take a look at how the setups are shaping up and what the trigger to buy could be. Hey, before we jump into the actual chart analysis, if this breakdown is helping you see crypto more clearly, subscribe and turn on notifications. I share content like this with other traders to help them cut through the noise and trade with structure rather than emotions. Okay, let's start our analysis with crypto gold, Bitcoin. As we see, we hit a high back here in October after a significant rally where we went from here up to here. Well, how large was that rally? Because it's important to know, because if we get a symmetric move to that, that'll give us a projection of where prices may go once we find the bottom. So if we grab our tool right here, go down to, let's just look at this last rally in here, and we've jumped up. It ran 70%, and this was from April of this past year. Now, it has fallen over 50% down to this low here. Let's just double check that. Okay, about 36%. I think it was XRP that actually fell to 50%, but about 36% since the high back in October. What kind of pattern is shaping up right now? Well, one of the things that I really try to look at is I look at two different things. My momentum indicator, which I use TSI, True Strength Index, and I have it set to 883. Now, I did the studies and I did the background testing of this, and it is very uncanny at how well it at least establishes where reversals should be. As you can see, when it gets down to this lower reversal zone, that is oftentimes an indication of when we're going to get a rally back up to the upside. Are we approaching the lower reversal zone? Yes, we are. The positives on today's action so far is that, and today is the 18th of December, is that it appears as if the TSI is starting to curl up. Positive, on the other hand, my weekly TSI has dropped into the negative 42 level. That's my reversal zone, and maybe setting up in the very near future to reverse and go up. What's missing from this equation? Well, one, we have tested back down into the to this zone over here, which constitutes a zone of support. So we've tested that. It appears like we're either going to come back and retest it. However, the price action over the last 4 days is showing that at that level right there, which is about the $85,000 level, may be where we find support for a bounce. Cautions. Price actions are below each of the moving averages. This is the 200, the 50, the 20, and the 8. Until we get a reversal and a close back above the 8 and the 20, and also a cross of that, I would be very cautious. The positive side is the lows that we've seen for the last 4 days may indicate that we have a higher low in place, and then the next challenge is take out the high, which is right there at the 94,500 level. So leave a comment down below. Do you think we're going to bounce here, or will we test down towards the 80,000 level? And by the way, somewhere between where it's at right now and that $80,000 level may be an area where you'd want to be a buyer, at least a nibbler, on Bitcoin. Okay, Ethereum. Ethereum has also had a little bit over a 40% drop since August of this year and has been continuing to sell off. We've had a rally up to the 200-day moving average, and now we're bouncing back down to see if we can retest down in these areas here. The interesting thing about it is that we are getting a bullish reversal signal. Now, the day isn't done yet, so I won't say it's going to be a bullish reversal signal, but that's an inverted hammer after a downtrend. One of the things I like to take a look at, is it testing past support? And the answer to that is, yes, it is. Here's a support zone here. It's down testing in the area. Now, the low of that is down in the $2,600 level. The high back here would be about 34. And so looking to see if I'm going to put in a higher low. And I also want to be looking at, so that's it for support and a bullish reversal signal on the candlesticks. The other thing that I'm always taking a look at is, what is my TSI doing? TSI is my momentum indicator. One of the things that I've learned how to do over the past is it is still pointing down. So as long as my TSI on the daily chart is still pointing down, it is not on my list to buy. It's on my list to watch. And so as this continues to move down, I can just extend that line, kind of tangential to those, what the TSI is showing. And then that shows us about December 20th, TSI on the daily chart could get into the lower reversal zone. How long does it stay in the lower reversal zone? Well, the last time it did that, it dipped on the 19th of November and then came bouncing back out 5 days later. So having that kind of information in your toolkit will help you to be patient and be prepared. If you are getting close to a rally, I want to know how much does it have to run to get back up to the past highs? And check that out. It's about 23%. That should give you a clue also to the idea of doing swing trades on the cryptos because you don't have to sell the full position, but taking some of those profits off the table when you hit 20, 30, 40, 50% and knowing how far does that crypto coin tend to run when it gets in the rally mode. XRP. XRP is the coin that actually has corrected the most. It was down over 51% when it hit this low right here in the first part of October. And it started its decline back in July of this year. So it was basically the first one to go into correction, and now it has pulled back over 51%. What's our expectations at this point? Well, again, taking a look at it, we're at a level of strong support. Now, this is longer term support, and there's a couple of different support lines to look at when we see this chart. And those are one, my Fibonacci's. I've pulled down into what I call the magic fib box between the 618 and the 382 Fibonacci, 38.2 on the Fibonacci. And that's when price actions tend to reverse, at least for a tradable bounce. Now, we don't have that yet. However, the other two things that I find very interesting on the chart of XRP is I'm at support. I have currently today's not over yet, but I also have one of those. This is almost a tombstone doji right here on today's price action. For right now, we just call it a spinning top doji. And my TSI, both on the weekly and the daily, has gotten down into the lower reversal zone. Observe. I hope you see this. When it hits into the lower reversal zone, it tends not to stay down there very long. And we may get a really sharp reversal. So it's almost a V reversal type thing. So I would be, while we are, yes, below the major moving averages, as you see there, a rally attempt back up might be something that could happen in the very near future. Who knows? It could be a Santa Claus rally. Let's take another look at one other thing. Let's just put in a trend line up here. And yeah, we'll put it about right there. So we could get a rally that would basically bounce back up against this downtrend line. And that may be an area where we could find some resistance. So if I rallied from today's low back up to that line approximately, that would be about 12%. If I get back past that and back up to these highs, looking at about a 25% move. This would just be a symmetric move with what happened over here. You see that? So that's what I'm looking at on XRP. As you can see, I want to be ready to buy. I just don't, not everything is in place yet. And I promised you I would share just a little interesting tidbit. If you're looking for confirmation on TSI, wait for it to reverse and at least cross. And it'll still give you a fairly early entry. I would have bought here on this candle. And then from that candle, what would be my move to the upside? I would have, I don't know if that'll do that now. We won't do it absolutely, but about 11, 12%. And if I'm swing trading, I would then basically only, if it take out the low of this candle, I want to be out of the potential trade and set it up to trade later. As we look ahead into 2026, one thing we want to remember that opportunity follows confirmation. And I want to be waiting for the confirmation to be able to jump into one of these coins or maybe all three of them. Swing trades, I like to look at the weeks. We want to be in it for weeks to months, but not years. And that structure beats emotion. And so having a plan ahead of time, taking a look at the charts is very, very critical. We remember that with trading, there are no certainties. And so there are risks. And just because I showed you where on the chart, there's a high probability of something happening, that's not a, yeah, go buy it there type of thing. And so, trading does have risk. And this video is meant to provide educational material, but it is not financial advice. So we want to avoid looking at targets. You want to avoid that moon talk, if you will. What is my expectations on moves on the individual coins? Somewhere between 20 to 30%. That's a great place to be able to take profits on the swing trades. Remember that our fear reveals our habits. Structure creates consistency. And as we move into the end of 2025 and move into 2026, the upside on the coins could be very positive. At the same time, they could go into a significant bear market. And we'll just have to trade the chart in front of us to be able to navigate those waters. So as we head into 2026, the biggest risk isn't crypto. It's not knowing how you'll respond when markets get uncomfortable. And that's one of the reasons why I developed the trader's quiz. A lot of times, traders have an identity crisis. And they don't know what kind of trader they actually are. This quiz helps traders understand themselves before putting real money on the line. The link for the trader quiz will be in the description of this video. Remember, stay disciplined, stay subscribed, structure always wins.